Hey everyone, hope you had a wonderful Thanksgiving. So, jumping right into it, today we're going to go over basically the economic conditions based off of the Beige Book, which I believe is what the Fed might use, at least to my understanding, what they may use to determine whether or not there's going to be a cut in December during their next meeting. Um, and this, according to this book, basically, to sum it up the best way I can. Um, so it says overall spending declined with cautious discretionary spending among consumers. And over half of the 12 Fed districts noted weaker labor demand due to there's just different reasons, like when they mention just the conditions in the labor market. So some factors include um, they called them contacts because it's just based off of, I guess, whoever um, they reach out to. That could be businesses, it could be um, for lack of a better word, the first word that comes to mind would be like a um, institution, like a bank or something. So basically, it says those are just examples, but basically, it says contacts limiting um, headcounts using hiring freezes, replacement only hiring. So that would include, like, for example, people who are retiring or volunteering to leave. So voluntary departures and attrition through layoffs and adjusted hours where people were accommodating to like the business volume and artificial intelligence, which, like I mentioned before, like I've shared my thoughts on that, but I mean, that may be subject to change because it just says here artificial intelligence replaced entry level positions or made existing workers productive enough to curb new hiring. Um, I'm just curious what you guys think. If you can drop that in the comment section below, not just in the chat. I really, if like you can add like a comment below, I really do think that's going to help this channel, and that is one way you can support it. So with that, um, right. So I was gonna ask, do you think AI is good, um, for the labor market right now or not? Just just interested in, you know, different perspectives. And as far as the consumer spending goes, I mean, that makes sense. Like, I just thought it was just very interesting if, like, just coming from this perspective where it's like, okay, well, there's more obviously to the Beige Book, but basically, on one hand, like, just highlighting things that stood out to me. On one hand, we have consumer spending declining. On the other hand, um, like because of the government shutdown, people there was increasing demand for like food assistance, right? And we went over like what we the Pew Research Center's latest, I guess, uh, report on SNAP benefits. So basically, it says here, and I think last time I did mention that it'd be interesting to just to see like the percentage of people who have been recipients of the SNAP benefits over the years. Um, I did Google it once in another live stream, and it just, if I recall correctly, I think it was 6%. But like, okay, like that's Google AI, like I would rather check multiple sources. But as far as the Pew Research Center, I'm just going to read what I wrote down. The share of all U.S. households receiving SNAP benefits from 1980 to 2008 stayed between 7 to 11%, increasing to 18.8% in 2013. So basically, that was like after the whole 2008 thing. And again, to 13% of the resident population in September 2020. And it's just really interesting because just based off of what I'm observing, it just suggests like there just seems to be more people who are, um, like I mentioned earlier, cautious about spending, like discretionary spending, like, just perhaps vacations or dining out, things like that, right? And the increasing demand for food assistance, that's just a very interesting dynamic to me, just to observe. um I think that just tells me what I need to know about like current market, um the current conditions economically. And as far as like, okay, moving on to the rest of the stuff that stood out to me in regards to the labor market. um of course, like, there's been things going on with like immigrant workers, right? And so when I mentioned the different factors affecting like labor demand and, well, labor supply, um, yeah, I guess I think I don't want to conflate the two. So let me see here. And another thing too, like the next employment situation report by the Bureau of Labor Statistics comes out in December 16th. So I feel like we'll have a better grasp of I guess, the conditions then. Um, but let's see here. I feel like I need to understand this better myself. So I'm just going to move forward. But basically, the things affecting the labor market: skilled positions, fewer immigrant workers. Um, and I was looking into what they meant specifically, like, examples of skilled positions. And there's just, of course, there's 12 different districts, and one of them listed some examples. For example, the San Francisco district. So that would include legal services, manufacturing, skilled trades, and it also mentioned like wage pressure, um, because of tighter labor supply. And yeah, that just based off of observation, um, just sharing, like, just blurting what's on my mind right now: the labor supply, labor demand, people seeking, these benefits, the SNAP benefits, just the um, consumer uh, spending just doesn't look good right now. It seems like a really tight spot to be in, to put it mildly. um, and then let me just put this disclaimer real quick. So, of course, like, this is not financial advice. I'm just telling you what I've come across while, reading the news, and other um, other resources, which I'll add to the description once this live stream is over. So, moving forward to like the tax updates, like we discussed last time, the One Big Beautiful Bill Act, though, like, this is mostly about the IRS's guidance that they released for workers. So last time we talked about the U.S. Saudi speech Trump had like last week, and so he talked about like the no tax on tips. Now this talks about like just giving more detail, more layers to it. So basically, it says the workers who claim federal deduction tips and overtime pay via the One Big Beautiful Bill. I'm just going to add act because I think sometimes I just call things like in logistics like One Big Beautiful Bill, but I mean, I think it's properly called the One Big Beautiful Bill Act. So that was released last Friday, and apparently it allows certain workers to deduct up to 25,000 in qualified tips from 2025 to 2028, and looks like the threshold would be like 150K for single people, 300K for married couples filing jointly. And so there's also stuff regarding the overtime pay, and the deduction is up to 12,500 for single filers, 25,000 for joint filers. And then they mentioned like the transition relief. This is based off an article by CNBC, which I think did a great job summarizing this information. So it mentioned the transition relief, and so basically it mentioned that for the specific service trade for businesses, so SSTB. And being me, I wanted to know what that means, right? Because like I was like, okay, so what? Like, what's that? And then this article it gave a link to um, like this document with that lists like all the STBs. Excuse the ghetto-ness outside, y'all. But basically, the SSTBs include healthcare, legal, financial services, accounting, I don't even know, actuarial service, science, I mean, ACTUARIAL. So actuarial science, performing arts, consulting, athletics, brokerage, and trading and businesses, it says, where the principal asset is the reputation or skill of the employees, workers. I'm not going to pretend I know exactly. I think I need to articulate it myself, but I just think it's kind of like one of those things where it's like, okay, you associate, like, for example, Diane Finance, like it's very straightforward. um, yeah, even this like financial services, because like, yeah, you think of accounting, you think like you meet an accountant, you think about accounting, I guess, like that, right? Anyway, so another thing that came up in my what I wouldn't call it, well, I guess it's more like an alert, but basically was the latest updates again from the IRS. So apparently it unveils like new tax breaks, excuse me, for rural lenders. So basically the whole thing, the title is the IRS unveils new tax breaks for rural lenders, tipped workers, and overtime earners. And since we already went through, the tip workers and overtime earners, that information. This notice is called the 2025-71. So it outlines how lenders can claim a new tax benefit, allowing them to exclude 25% of interest income. And I came across another article called Fulcrum, which says it's the gross income. Just thought I'd throw that in there. Um, so let me read that again. Notice 2025-71 outlines how lenders can claim a new tax benefit, allowing them to exclude 25% of interest income from loans secured by rural or agricultural real estate. So I guess that'd be good for you if you're in that part of real estate, because now, I mean, I don't really know what it was prior to that, like, but apparently now you can exclude 25% of interest. So it also says, so based off of Solcrum again, like, I think it did it like, okay, so it explained what a qualified lender is, and that would include FDIC insured banks, regulated insurers, certain U.S. affiliates of bank bank or insurance holding companies, and farm credit system institutions. And let's see here. It also says a qualified real estate loan is secured by rural or agricultural property, land, or facilities substantially used for farming, agriculture, or farming, made after July 4th, 2025. I think it's just interesting because, again, like I mentioned, like the things that, like, I guess, for lack of a better word, the patterns that I'm noticing, it just seems like, okay, well, obviously there's tariffs affecting everyday prices, um, including food, right? And with the recent tariff, I guess, deals in South America, it's to reduce the prices for certain products. I understand that. Now, I can see why this um, this kind of incentivizes people in agricultural real estate to like, it just seems like it's um, being set up to where it encourages people to at least produce more products here, is what it looks like to me. And it just seems like, um, as long as you are preparing, as long as you have, I guess, um, a business that lines up with, I guess, those interests, right? Like when uh, President Trump first, like when he entered office again, like earlier this year, like if you're lining up with, um, making things in America, it just seems like things are being set up to where, obviously it would benefit whoever is doing those things, right? Like producing food at home. Um, but of course, like short term, it just doesn't feel great because, everyone else is just experiencing the price hikes, it seems. And like just the way things look right now, it's just, I can understand why. I guess I guess if it depends on your perspective, because um, if you're just focused on the prices and seeing them going up, and then, you know, like I guess buying into the fear, then that can be unhealthy, I think. And so, yeah, that's just at least what I'm understanding from all of the information I'm gathering so far. Um, but I want to make sure I'm articulating my question because, um, like, just based off the information I'm sharing, with you guys. Like, I'm curious what your thoughts are. Like, how do you see, um, like, things from your perspective? Like, I've shared mine, like the things that, the patterns, I think, like I mentioned before, like, uh, I think even when I was reading this stuff, like it mentioned like of course, artificial intelligence being used to, you know, I guess reduce costs and, time spent producing stuff. Um, but although that it looks like it does affect people's employment, right? Like I mentioned earlier from the beige book, like it affects the the entry level jobs. At the same time, like I think it did mention the data centers, which takes me back to our last live stream when I was referring to President Trump's speech when he was talking about like it seemed like he was just encouraging people from around the world to come here to teach us how to make chips, to teach us how to produce that. Um, and that's where I think I can see like more job opportunities. But again, it would depend on whoever is positioned to make, those power moves. Um, with whoever is involved in those kind of with those companies or whatever deals will be made. It really depends on what their priorities are, um, and their heart posture, honestly. Um, because I can definitely see if someone is not really thinking about employment in the area, if that's not really their priority and they're just thinking about reducing costs, then I can see how that would validate what people are concerned about in regards to AI taking jobs, right? Um, but like I mentioned before, I prefer to be optimistic. Um, so that I was also thinking because I think it was the day after I did listen to. I don't know if I watched the whole thing. I listened to not President Trump, excuse me, Elon Musk's speech with Jensen. I don't know what his last name is from NVIDIA. Like they also had a conversation with someone from Saudi Arabia. Don't know his name, but basically, Elon Musk mentioned something about jobs not really like being a necessity anymore. And I'd like to hear your thoughts about that. Do you think that's actually a good thing? Like some people, they get a sense of fulfillment, um, a sense of, you know, I I mean, I don't I'm not sure I like this, but some people get a sense of identity with their whatever they're doing, Um, and with AI, that makes me think of this video I saw recently actually. Well, I didn't actually watch it. I just saw it on my feed. There was this robot that did like yeah, it was on Valuetainment. One of the I think it was the same video where the robot's literally in someone's home doing all the, you know, things like the chores to save people time. Um, which I understand, like, if they were to implement that, like the AI, the robots, doing things to buy people more time, like that to me, um, I'm not so sure how healthy that would be. Um, it just looks more like, you know, it just looks more and more like iRobot. to put, yeah. But yeah, going back to the question, do you think that that picture, of robots, AI being used to like take care of things um to give us more time? Do you think it's really, is it too convenient? Is it too efficient? Like, I don't know if I want to say, I feel like the I want to I want to be careful because I can blurt out what I really want to say, but like I feel like it might come off red flaggy. So I want to think about this carefully. um let's see here. Like, is that, yeah, would that be a future you want your, like, that you can imagine your family being in? Like, I don't know which, point in your life you are in, but like, is that an environment you want to raise your children in? Is that an environment that you think might be beneficial? Say if you're running a business, if robots, AI is taking over, like, the things that can be automated, taking care of that for you. I mean, I guess the other argument would be that would free up your time to do things and be more creative, which I think is the idea being sold with that. Um, but I mean, that just makes me think about, like, the smartphones that most of us have today. Like, I've been listening to like marketing stuff, right? It's like, okay, they sold the, I guess to put it this way, it's like they sold the dream. They sold the vision why someone would buy this product, and then over time, like, with that product, you kind of expect the high end price. Um, it's almost the same price as a laptop, right? But although we have the internet and we can talk to someone from anywhere at any point in the world, and it's all in the palm of our hands, um, and also have access to social media, which, if used incorrectly, can be unhealthy for some, depending on where they are in life. Like, there's just pros and cons to it. And, like, I just think it's really, I think it's wise to take a moment to really think about what is really being sold, you know? And, like, some things, um, like, social media is great, right? And it's allowed us to interact, engage with people, just depending on what community you're part of, what your interests are. Um, but at the same time, um, like, you can use it for your business, but at the expense of what? Um, but I think I'll close up tonight's live stream for now. But I mean, I'm interested, which part of this live stream um, did you find, I guess, the most interesting, if not like the most beneficial for you? Um, I'd like to hear what you have to say. So make sure you put that in the comments below. And of course, I'm on other social media platforms, the same social media handle. I don't know where that came from, that. But anyway, I'm on LinkedIn, IG, Threads, Facebook. Um, and also, if you are interested in discussing your goals with me, you can book a call on my Calendly page. You can also find it on the About Me section of my YouTube profile. And, we can go from there if you want to discuss, I guess, more things regarding your financial goals. And I can also connect you with other licensed financial professionals. Um, and again, we can go from there. But anyway, I hope you have, I hope you found this live stream helpful. And yeah, have a wonderful weekend. And I will see you next time. All right. Bye.